Hey everybody, Boris Hustler, BK Forex. Welcome to our Forex Weekly Technicals for 7/21/7/25/2014. Where are the trades? Well, the euro dollar finally came in to touch the 35 level, but continues to basically bounce off it. Today, the touch was very quick and bounced right off of it. And we basically maintain this level for the time being. But I think the closer, the more touches we get of this level, the likelier it is that we're going to start to penetrate to the downside, especially as we get next week a lot of European data that could be very negative if it telegraphs that the economy is actually starting to shrink. One very negative possibility is that the German economy could actually come to within an inch of contraction. If that's the case, because of, let's say, slowdown in Eastern Europe and all the geopolitical tensions, then I think the euro really comes under much more severe strain here, and we potentially could have a move down to 34, down to 33 on a longer term basis. Bottom line is, though, if you're looking at a longer term chart, obviously you see a failure of lower highs continuously here. The turn off the 140s, the anemic rally above 36, the anemic rally to 37, the anemic rally above to 36.50, and every time we're kind of just sort of falling down. So euro continues to be sell the rally mode, but we're now coming up to a very key support level here at this 35 level, which then, if it breaks, really opens up the prospect of basically 34.76 is the yearly lows, right? So that's what we're going to be testing. Once that breaks and 34.50 start to go, I think the natural prospect then becomes the 33.50 level, which is where we had the lows from last year. And that could be the story as the week develops next week as far as the euro goes. Dollar yen just sort of remains in this very tight 100 and 101.50 range. The key support here, as we've been talking about, is this 175 level. This was touched twice, and then we basically been touching the 101 level continuously on a support basis. Dollar yen is suffering from low U.S. yields and just really can't get any traction to the upside until we get any kind of a thematic move that suggests that yields are going to get better. And that may very well be another another couple of months of just utter frustrating consolidation. Bottom line is, it's just a very tough trade right now to garner. You could have potentially a surprise trade to the downside if you have a severe risk-off situation next week that causes some pretty serious liquidation. Then obviously you have the move perhaps down through the 150 and a possible test at a 100. That, by the way, brings up the very interesting possibility that if you have the serious risk-off trade here, what's very vulnerable is the euro-yen trade. So euro-yen 36.35 is the lows of the or 36.22 is the lows of the year, and those come right into the play. And of course, it opens up the prospect of a 35 trade in euro-yen to the downside if you get acceleration, of the move. Pound dollar is slowly but surely rolling over. It's it had a test here around the 70.50 level, but clearly the 71.50 level kind of capped its out. We do have data next week out of UK. We have retail sales, we have GDP. If that produces surprisingly strong numbers, we could have just a complete flip and turn around and a move back up to a possible test of 72, perhaps even 72.50. But if we get any kind of even a minor disappointment, the bump in the road provides a perfect opportunity here for liquidation, a move through 170, and perhaps a move all the way down to 6,900, which is where support is going to be. So the rollover in cable seems to be the more likely scenario, unless we get surprisingly hawkish data. Aussie, on the other hand, just does not have a lot of data next week, but it's just basically holding still. We do have Chinese data a little bit that could potentially provide some support, but Aussie seems to be just now in this consolidative phase. Let me just get a little closer. Between 93 and 94 effectively. That's really what we're trading. 95, clearly the big cap in the Aussie. I don't think we're going to visit that anytime soon. But 93 really is finding quite a lot of support here. And unless we get some very severe risk-off liquidation, even that doesn't seem to really push it much beyond the 92.50 for the time being. So Aussie remains relatively quiet. What did keel over this week was interesting was the Kiwi trade. And that was interesting because the Kiwi actually, I liked it last week and it completely turned. And the reason why, of course, is because we had very weak dairy price auctions and a lower than expected inflation data. All of that created a pretty serious liquidation here for about 150 points, and now we came into the support at 86.50. We have the RBNZ statement. It'll be very interesting. Nobody expects the central bank to raise this cycle, but what will be interesting is exactly what they say. Whether they will no doubt jump on the currency lower, but the question is, will they sort of leave the prospect of any further rate hikes a question mark? If they suggest that perhaps rates are sufficient where they are, that will create a much more severe liquidation all the way down to 85s in the Kiwi, as the market is still pricing in another 25 basis points before the end of the year. So that's going to be a big event this week, and it's going to be worth watching. Last but not least, dollar CAD. Dollar CAD kind of flipped itself around. We had dovish. We had terrible employment data, which pushed dollar CAD through 107. Then we had a relatively dovish commentary from the BOC, but then we have relatively hawkish inflation data. So we have this confluence of contrary indicators where price levels are going up, but demand clearly is not growing as much as they want, and that leaves the BOC in an uncomfortable but still accommodative mode. That leaves dollar CAD potentially still a trade all the way up to the 108s, but at the same time kind of capped. I don't see the Canadian dollar getting much weaker beyond the 108s, 108.50 level. That's going to be the resist here, where probably going to be a very interesting level to sell. Given the fact that this was a big shelf of support, that becomes former resistance. Former support becomes current resistance, of course, and it potentially move back down if we have any kind of pickup in economic activity in Canada. Dollar CAD wants to go down and wants to strengthen out because clearly the bet here is the BOC is going to have to start tightening, and probably almost at the same time as the Fed. So that provides a little bit of a boost for Canadian dollar going forward. That's pretty much how the week shapes up. It's going to be some interesting specific country event risk next week, especially with New Zealand, with UK, and of course with Europe, that I think could be interesting. And all of this, of course, against the background of the geopolitical tensions, which so far have really not been a big play. But one way where all of this can kind of come together again is in the euro-yen trade. And that trade, breaking of the 36s for a move towards 35s, could be a very interesting development if we get much more tension next week. Wishing you guys the best of luck, the best of trading. This is Boris Schlossberg, over and out.